What's up, everybody? We're going to do after doing our Bitcoin higher time frame analysis, we're going to do our gold higher time frame analysis. A little bit of water, and then we can start from our monthly period and etc. etc. So, as a recap of gold, starting from late 2007. December, when we start seeing and admitting of the financial crisis being there, we start seeing a bullish run on gold, which is, of course, the safe haven precious metal used against inflation, used against the devaluation of the US dollar, is sort of the safe haven against a safe haven. Where people go to if there are crises, wars, tensions, where people want to put their money if they are not unsure, if they want to risk it on the markets, on the stock exchange. Exactly, usually gold is the opposite of US 30 of the stock market price, because if we see a rally in the stock exchange, we see investors pulling out money from the market. So if we want to see this way, gold goes up, and then we have stock exchange going down on stocks, money that goes into the investing, risking assets. Yep, 30. Of course, it's not that clear, it's not that picture perfect, but it's just to give you an idea of the basic fundamental correlation. So, late 2007, as I told you, we saw the start of the financial crisis, which was later on late 2008, 2009, very, very present, very, very clear to everybody. And we saw lowering interest rates, higher quantitative easing made by the Fed, and of course the financial crisis. Gold was very, very bullish. I'm not going to dissect gold exactly for the fundamental reasons, but we know that is financial crisis is lowering interest rates, so increasing the supply of dollar, quantitative easing, increasing the supply of dollar, financial crisis, which is a sort of panic, tension catalyst, and of course the interest, the risk aversity of the investors. I will be missing something for sure. But we saw a very, very bullish spike until the late 2011. When we start 2012, we start seeing economy rebounding. We start seeing Fed talking about interest rate hikes, cutting of the quantitative easing, and with a good good employment, good labor force participation, the US economy going to recover soon from optimism in the market, recovering soon from the crisis. I just thought about it, and yes, stock market dips below, but as soon as the Fed doesn't, I don't want to be wrong, so I want to correct myself, because as you see a big dip, like it happened in 2020, but as soon as the Fed starts giving a stimulus, quantitative easing, they're putting the money in the markets. So you see a very quick dip, but then you see even during the crisis, price going up, because they are inflating the market. So I want just to correct that on the stock market. But let's talk about gold. We saw, as I told you, on for Bitcoin, we saw this behavior, then hyper impulsive, make new all-time highs, then we get in the hole of hope, people buying, thinking that price will skyrocket again, and then a deeper correction. Of course, gold, it's a safe haven. It's more is used more as an hedge against inflation or devaluation of the currency, but behaves the same. We saw a correction with fundamental reasons for it, retracing and retesting this previous level almost on the dot, and then with fundamental reasons we saw going to new all-time highs now in 2020 with the coronavirus pandemic. But we're still here for the 2012, Fed talking about raising interest rates soon, tapering of purchasing assets soon, and we start seeing optimism in the markets. We see a deeper correction. It's late 2013 that actually Fed started tapering the assets. So we already had this price in bearish correction. And this is at the end of 2015 that Fed actually raised interest rates. So as you can see, this is a very clear explanation of the pricing in concept. I will mark it up. Pricing in concept. I'm not going to explain on details because if you go on the webinars of Capital Hungry, you will find plenty of it. So here you have you still have in 2013 quantitative easing being there, but unemployment, decreasing, optimism is growing, Fed talks, H. You see here that investors are already selling gold way before the Fed talks become about tapering and interest rate hikes. Already here you have this big correction. Okay, here. And this correction is all bearish correction to optimism, because I say that because when do we see the actual tapering happening? Here. Actual tapering of Fed assets. And again, we saw these 2 years, 2013, late 2015, correction due to optimism regarding the interest rate hikes. When do we see the interest rate hikes? December 2015. Actual interest rate hikes. And you see, okay, you might think, okay, interest rate hikes, gold is going to drop. But you don't understand that has been already priced in. It's counterintuitive if you don't know the markets. And it's something that might happen on Bitcoin as well. Pricing in optimism, and people say, okay, now it will go up. But it already went up for those reasons that you think about, because investors are already always ahead of you, ahead of us, and they're so greedy, they just want to price in. They just see the optimism, they just price in. So let's continue. This is the pricing in concept in place in the actual practice. But let's see right now, where are we? So we got this bullish uptrend. We had a bit of order block being created, and then with the optimism, we broke below the previous order block highs. Here, okay, so we got an all-time high, order block being created, and clear downtrend correction. Then where are we now? We created, this is the, I'm not going to explain it, this is pandemic. I ran tensions from late 2012 till 2019. This is a big sell-off of gold from China and Russia, and but overall, then so we can say Iran, trade wars plus Iran tension. Gold, physical gold sell off from China and Russia, I think. COVID. Okay. From there, where are we now? We are in the order block being created. Now we don't know where it is going on. If, okay, we had a leg up, correction, bounce up, correction. Are we going to have another attempt to make new highs and then sort of liquidity grab, price setting points here, and then continuation down, break below, and then bearish? That's not up to us to know, but this is what we have to be aware of. We have to be aware of this history repeating itself. Of course, we can see correction playing it with intraday trades, but then we have to be aware of this history repeating. Why? Because we are now in the period of Fed talks about tapering and interest rate hikes, employment decrease. Inflation possibly under control. Okay, and we come to our talk. We are in an untested, unprecedented period of inflation coming in from a global lockdown. This event actually caused a global lockdown. Then This event did not. And that's why the spike that happened here was in 1 year, while it took 2, 3, 4 years for this spike up. So this is might be very different, but very similar in the concept, but everything can happen really fast. As you can see, the cycles are happening faster. Instead of taking 2, 3 years, here it's taking just 1 year. So we can have impulsive break below much faster than in this period. So we might get a break below soon. If they say now that in August, September, they talk about real optimism about tapering, then we can see price breaking below 1780s, 1680s, and then dipping below and having our correction, retesting these highs, and maybe continuation up if we have other tensions. But we have to be aware of the upside as well, because this unprecedented situation has two big problems, two concerns. One, COVID variants. Two, high inflation. So the COVID variants are being downplayed right now. The Delta variant can be, yes, just not a big issue if the vaccinations rate continue to increase. But if leads, as it is doing already in some countries, to further lockdowns, it can be sort of, not saying a repetition, but almost an issue, almost, even if it is 50% of this first pandemic, can lock down economies, therefore affecting the currency and the economy recovery and everything. So in this case, I will see gold possibly creating new highs, or at least, since we are now at these lows, we can expect these two concerns to give us the momentum and reasons to retest those highs. But since we are not possibly in a few months in the same situation, then we will have the spike down. So let me go on the weekly or even daily time frame. Let me clear everything. Okay. So this was the after pandemic, after crisis. As you can see, the order block being created, and then optimism, high risk, high reward sells, and then impulsive break, retest, and continuation down. Now that we can be aware of when this is late 2012, September, December, Fed announced that there was another round of QE in 2013. Yet, we see investors already pressing in the optimism. And then what we can see here on the right hand side, I want to go deeper in this 2 days, the current situation. Maybe it's better to go on the weekly time frame. Okay. There you go. So as I told you, we have these last lows at 1680s, which are the price points, but if broken, we can expect price to continue down to at least 14,000, 1400, which are the previous lows, highs on the left, or maybe shorter here to these lows. It's very important to understand that yes, if history repeats itself, as you can see, we might have like up to 1850, maybe with some COVID concerns, maybe we can inflation figures still high, maybe we have some minor lockdowns in some countries or some concerns about Delta variant, and we break and retest those previous highs, and we go to 1950, 1960, almost revisit those highs. But then to break above here, honestly, I will only see if hyperinflation, full lockdowns for COVID, war. Okay, and this is what I might see till the end of the year for price to continue up above the level. Otherwise, I only see, exactly like I told you in Bitcoin, these are just price points, not making new higher highs, where we can have high risk, high reward sells if we have the confirmation. So the confirmation in this case would be inflation steady and under control, COVID fears fading away thanks to vaccine, or if you don't believe in vaccine, can be to the government just not giving them anymore. Unemployment dropping, spending increasing, tapering interest rates, talks. This can be either talks slash time frame for those. Okay. Why are you doing this? Okay, talks slash time frame, specific time frame for this. Okay. Does it make sense? What are we looking at? We're looking at history repeating. If history does not repeat, we need fundamental reasons for it, for price to then, okay, maybe we are not yet ready, but we can have this spike down, this move down. Let me just from here, 1, 2, 3, and only above this level you can consider buys, but probably if we are above this level, something already happened. So something very big. So this is my high time frame analysis on gold. And that's it. That's it. We'll see in the next weeks what happens. See you guys next time.